All right, let's jump into things. Where are we at? 10:06. Actually, just update this one. Where we at? 10:06 on Wednesday, 20th of August. So flying three quarters of the way through the month. Three quarters. Joe's are definitely in another cover. Two-thirds of the way through the month, and half the way through the week. Look, pretty much the news is just going to be the same each week, each day this week and that, because we know it's pretty sort of sparse on the bits of data and that at least that are sort of affecting basically what I'm trading. But just to see what's happening with the CAD over here, we had CPI overnight. That was obviously sort of failed to sort of tick up here a little bit. So obviously a little bit weaker on the CAD for this one here. Commodity currencies as a whole. So in this case, obviously CAD and Aussie being the main ones, that they're really sort of struggling at the moment, which, as I sort of said over the weekend and obviously through yesterday, we were looking for those moves down underneath 64.80 on Aussie, particularly, which we got and moved right down to next target, 64.50. And it's sort of flirting with the lows at the moment. So obviously I'll get to this with the charts at the moment. But this, if they're already sort of hammering the commodity currencies, having a sort of weaker CPI is certainly not what they sort of would have wanted. But moving on, we have sort of building permits for yes, these building starts are up, building permits down a little bit. Again, kind of nothingness bits of data and really. As I said, Bowman was speaking overnight, and from what I can tell, it sort of didn't really seem to affect much. I'm just having a look at what time we sort of kicked off. Uh, it's on a different chart. 4 o'clock. Yeah, no, very little impact to no impact. So it'll be interesting to see what her sort of comments. Actually, let's just see now if I can find what her comments were. All right, so sort of found what it was. It's kind of a bit of a nothingness kind of thing. Basically, just sort of talking about. There's a little screen grab here. Talking about sort of blockchain stuff and sort of proposing that the Fed they ease the restrictions to allow the Fed small crypto holdings. I saw another thing there where they're sort of like likening it to sort of skiing, sort of learning by I guess sort of like by sort of falling over a couple of times or something. But beside the point, it's got really nothing to do with what we're looking at. And she's obviously been one of the people that's been sort of very sort of pro Fed cutting sooner rather than later kind of thing. So yeah, that hasn't really sort of impacted the market too much at all. So just saying DXY with a big breakout here actually. So we'll get to the charts in just a moment. In terms of that, it's as I said, nothing really impacted the market so much. We got a bit of China data coming out today, 11 o'clock, looking to sort of pretty much be pretty stable. We'll sort of see how this sort of plays out. I think the big sort of one today is going to be the cash rate, cash decision on RBNZ. That's obviously looking to sort of tick down. I covered this over the weekend. They've been cutting very aggressively from because they obviously spiked. Look at this. Look at the gradient of this. Bang. And obviously it's still coming back down here. So probably still a little way to go, you would sort of say, with this. But so I would say most likely the idea is that they are going to be cutting there. And we can see if that can have any sort of proxy effect on say Aussie or any of this kind of sort of stuff as well. Possibly a little bit, just sort of like, these things tend to kind of be grouped together a little bit. Not so much that it's going to be like, okay, that's going to be the thing that sort of really clinches it, but certainly, what I mean, say Euro and the pound and Canadian dollar and the US dollar, sometimes those bits of data, just because they're, a stone throw away from each other, or as I got a colourful term actually, apparently in Italy, it's called spitting distance. So we say a stone's throw. They say it's spitting distance to New Zealand from here. So close. See how they go there. CPI over in UK coming out 4 o'clock. Probably something to watch. It's generally about the time we're at the gym. So look, that's ticking. What was RPI? Okay, interesting. Anyway, headline number there looking to sort of tick up a little bit and the core to stay sort of flat. But again, these are quite high numbers. So it's not looking sort of super flash hot for the UK, I would say, in this sort of instance. Um, but yeah, I mean, any sort of tick up there, you may see a little bit of a sort of firming up. Because obviously, sort of like, inflation going up, well, you're not about to sort of cut rates and exacerbate that issue. So it would be more sort of hold for longer. but at the same time, they do have a couple of issues over there. So, pound may not be looking so strong here, particularly with US dollar having a bit of a push at the moment. Moving forward, yeah, not really a great deal. We've got sort of CPI over in Europe over here, so that's more down in the band. That's what people, but again, looking stable. Euro final core CPI. So is this for the whole? They do it as a whole place or something? I guess so. Anyway, moving forward, not really too much, not so much. Waller, well, okay, so Waller was the other dissenter. So there was the two dissenters, sort of Bowman and Waller, and Waller. So Bowman obviously didn't seem to affect the market a great deal, going off and sort of not really so much talking about the sort of cuts and that kind of stuff at the moment. See what Waller has to say, and then the Fed minutes. I suppose the Fed minutes are probably what people are going to be citing as like the sort of main bit of data for the session, to sort of see how that sort of plays out. But again, look, we hear from these Fed speakers so often. I don't think it's going to be, oh my God, wow, we never sort of thought about this and never saw this happening. So, yeah, again, look, I think fairly sort of quiet on the news front, on the data front. So, yeah, I think it's pretty much just back to the technicals. And on that, sort of, if we flick across, because obviously, the big one that's moving at the moment is DXY. Finally, actually put in a bit of a higher high. Look at this, bit of a consolidation coming up through here. Let's drag these across because these are going to be some levels that we're going to be looking at over the next couple of days. So look, if we sort of start up on the daily and we sort of start to sort of move down on the sort of time frames, you can see that this is a nice little consolidation off this support zone down here, fluffed around a little bit, and now we're starting to move up. So we've got a nice little sort of short-term target probably coming up into this little sort of horizontal here. So again, look, I mean, the thing with the US dollar at the moment, and has been a lot recently, is it's just had such a tough time actually holding any move. But what we've seen here is kind of think about it like a break. Like this is NFP, then we go to ISM. This was just a little fluff up wick. This wasn't a real wick kind of thing. But just think about it. It's like coming down here and it's kicked on the brakes, skidded, and now it's trying to push back up over here. Not having a bottom wick is a little bit of a cautious thing, just for intercession. So basically, with these sort of things, generally you'll see every single wick. Very, very rarely would you ever see a wick without a candle without a wick on the other side. I mean, had one just over here, I suppose, but that was a gap down, move up. It obviously came back to it and sold straight into it and continued that sort of direction there. Now, it's not to sort of say that, okay, there's no bottom wick, okay, it's going to turn around, but it's something to keep in mind because generally what you'll see with these candles, and it doesn't matter because like all this stuff with technical analysis, it's the same general principles on every time frame. It's just that the higher the time frame, the more significant some of these moves. So this means that basically, we could still see this sort of continue up early through maybe Asia. Like it doesn't mean that this move's going to automatically turn around, but at some stage you would expect this little sort of candle to come down, put a bottom wick in. So I'm going to put a little alert on this. Bottom wick in that. So means that sort of like if we do get a push up here, we know a reasonable area where market could be trying to sell it. So let's look this one. Alert here. Daily res levels. So idea being, we've got an area where we could expect sellers to be. We've got a target for it to come back and that put in a bottom wick. Should it come back down, put in that bottom wick very easily. Like it doesn't have to put in a massive one. I mean, if you zoom right in on this little big one here, look at the size of the bottom wick there. It doesn't need to be anything massive, but it's just generally that you will see a wick on both sides of things. And that, look, nothing's 100%. There's always exceptions to the rule, but it is kind of generally what you will see. And this will happen on 4 hour. It'll happen on, 10 minute, 5 minute, 1 hour, all these kind of candles and that. So it's just something to keep in mind. So if we do see a shoot up here a little bit higher, I'd be taking profit a little bit earlier, expect a little sort of push back down. And then should we sort of like put in that bottom wick, I'd expect that's when we'd probably see a second effort pushing up to the top side there. So that's on the daily. If we get down a little bit here, so uh, this is how ambitious I've sort of been with, or ambitious is sort of like, thinking that US dollar was going to hold these things. I had over here, I was like, oh, look, if it goes up here, we're going to get pushed back down. You know what I mean? And then I'm like, yesterday, look, today it'll be the thing. And I thought maybe we would see this push up with the buyers here. We did get the push up with the buyers, but as you can see, it's right on the money of exactly where we had marked out previously of the market looking at it. So, it's obviously deeper than I sort of was anticipating for that sort of pushback, but right on the 61% retracement of this push up through here. So we clipped into where we thought the sellers were going to be. This is PPI highs. PPI highs, they sold it back down. That's fine. It came back down a lot deeper. But as I've said a couple of times, US dollar is particularly at these low levels trying to turn things around with such a overwhelmingly sour sentiment to it all, is not afraid of deep pullbacks. I mean, look at this. This is the pullback from the other day, 78%. You know what I mean? Even as we sort of came through here yesterday, what I did actually say yesterday was that we could see these deeper swings, and what we were looking at was potentially like a bit of a triangle. But this actually pushed up and clipped into here, so I kind of got rid of the idea of having this triangle through there. But I said that, look, it could dribble down here, covering both bases. Yes, I know, but that's what this is. That's what trading is. You're not moving the market. You're planning for sort of what could potentially happen should the buyers do this, should the sellers do this, what does it mean, where are they going, these kind of things. So keep in mind that, as I said, this is not only a no bottom wick in that, it's got a little bit of a gap there. So, I wouldn't be surprised to see this closed, as I've said just before as well. But certainly, look, the pullback came back down to a nice level, 61%. We know that this is a good sort of retracement level, and bang, up through here, and we'll put in the highs. So look, it's looking strong. I'd expect this probably to sort of continue on a little bit. I wouldn't be surprised if we come up over here and fill these bits a bit. I put that alert just here where I said the daily level crossing there. Let's just put a line across here as well. This is body fill. So body fills are always good in my opinion. So as a little target. So expect some profit taking in that if this alert goes off. That's my sort of little note for myself. So yeah, all in all, looking good. It's put in a higher high finally. We got a higher low as well. So you could expect this to potentially shoot across. We've got a little bit of a sort of lower range through here, which may provide a little bit of a pushback. Sort of 84, 84, 84. What am I talking about? That's bloody dyslexia or something. 98.45. But certainly, look, there's a nice clear bit of room to move should you break out through this higher zone over here. So, as I said, early sort of session, I would expect maybe a bit of a continuation of a push up through this area here, a little bit of a pushback, which is fine because we see sort of, uh, gold coming down into that 33.10, Aussie hitting that 64.50. So they're coming into those targets, they're coming into their support areas. So there's a good idea or a good chance that sort of as we see, those things start to hit those targets, you see some profit taking there, you see some flow of the capital come back out of those markets and then sort of back into, sort of the flow come back into those markets, and this would be around the same time you could probably expect to see a little bit of a cooling on US dollar. So it's just a balancing act of sort of going, okay, well, money's flowing this way, money's flowing that way. So at the moment, you're seeing sort of money flow into the US dollar. We're seeing it come out of gold, out of Aussie. Obviously, other things like euro and pound and all this stuff as well, but this is all that I'm trading at the moment. So as that sort of flow sort of comes out of those things, where do they see opportunity? They see opportunity in the US dollar. US dollar moves up. Now, sort of as they go, okay, hold on, wait, maybe this is high as we want to take it, and we start to see this move back down, you'll see the flow of capital will come back out of US dollar. Well, where's it going to go? It's going to go to these places that have been bashed down, because it's just think about it. It's sort of like, it's like the mentality of like somebody that's like, wow, I liked it yesterday. Well, now it's, 50 points cheaper. Why wouldn't I like it today? and people will give it another shot from those levels. Doesn't mean that it's going to hold. You could see short-term rallies in these things, and that's what I'm looking for. I'm looking for that sort of little flow of capital back into those markets to give me a better level to short more from. So, I closed a lot of my shorts overnight, so stuck to the plan, which is good, banked pretty well, and now sort of be waiting a little bit to sort of see if we can get a little bit of a kick up in these things, just to sort of short back into. So it's just that sort of the balancing of the to and fro of where the capital is. But as I say, it's a nice little strong open for US here. I've been noticing basically 11 o'clock, 12 o'clock, you're getting that sort of push of volume come in, and then after that, particularly through Asia, just dead. And then we got sort of like through till 4 o'clock. 4 o'clock we generally see a bit of a counter move of the price action we've seen through the day, and then resumption, if that is the case, without any other catalysts going through into Euro session. So going on for a little bit there, but that is the plan of attack for the day. All right, so jump onto gold. And this is where we're starting to see gold really come down into these higher levels here. So it's taken a while to get down here, like a couple little flare-ups and that. Excuse me. A couple little flare-ups along the way here. But you can see that sort of once you've started to move down through this area, a couple little tests, and then bang, sort of smack down there. So we're coming into an area where we could expect to see some support come in. This is what the plan was. Oh, yes, it popped up here before it got down here. But the idea is that you would expect some buyers to give it a little bit of a shot around this sort of 33.10. And that's where it's kind of stalled a little bit. It doesn't mean it's going to hold. Doesn't mean it can't just go and then power down through this. And if it does, well, that's great. But certainly at the moment, it has, as you can see, big drop down, a little bit of a grind into this low here. So we'll see what happens 10:30, 11 o'clock and 12 o'clock. So what's that sort of, where we at now? 10:25. So 5 minutes, 35 minutes and 95 minutes. We expect to see a little bit of sort of movement into these markets to sort of see what they're going to kind of do through the session. But should we see any sort of rally up in these areas here? As I said, I would like to sort of short it again. I don't think we're going to see these higher levels at this immediate time. I think we're probably going to see, if anything, the people that were trying to buy it and hold it through these areas, I reckon they'll sort of try and sort of get out of their positions, which will sort of add to the selling pressure, which will give us this sort of action here. So I think if we get that move through there, I think that could be the sort of the play for here. So I think the move's played out at the moment. It's stuffing around at these lows here. But if we start to see, as I said before, if we see sort of US dollar try to put in that lower wick, I think that's when we'll see the flow come back into the US dollar a little bit. We could see this push up a little bit, and that's when we start to sort of try and pick the levels where we want to sort of get into it. So with these sort of things here, if we move these out of the way, we can look at sort of these points. So these will be like this point here and these points here. I think it's telling how quickly they jump back in. So obviously with this stuff, you use the fibs, and you can use a big fib like this, but you can obviously still use it lower time frame like this to sort of see how strong is that flow coming down. So if we put a fib just over this last move coming down here. So people like to use fibs and they'll go, no, you got to take the top of the trend and bottom of the trend, and that's fine. But the thing is, this is the move that we saw the breakdown sort of through this move here. So if we see sellers come back in and we're at the 38, we know that this sell down move here is still quite strong. And it's all about that second effort. I cover this all the time. You move down, you find support. You move up, you find resistance. You're going to get that third leg. And this third leg's got to give you either that high or low, which could give you your potential sort of, okay, hey, we've got a base and we're going to turn around here. Or more likely, as I think, we're going to come down at least test this bottom area here, if not sort of break through. And then that breakthrough there is obviously going to lead us into, open us up to that sort of 3280s, which is a lower level down over there. But I'm just going to manage a few positions here. One sec. All right. Yeah. So yeah, that's my sort of plan of attack. As I said, a little bit of sort of rebalancing of this move down here. I want to see the conviction of the strength of the sellers. So by that, sort of, let's get these out of the way. I want to see the fact that sort of the market is accepting this much for it. They were expecting. Let's make this actually do this. Template sells. I had one as sellers. No, sell zone. So what you want to see here is like, I mean, this is basic sort of stuff, but there's the sellers accepting, 33.58 and going, yep, let's push it down here. They've sort of thought, hey, look, let's push it down here. So what you want to see is a continuation of this pattern, and you want to see where's the conviction come in here? Where do the sellers start to go, oh, look, this is rallying up, that's fine, I'm going to sell it here. And you want to see this pressure continue to push down like this. And this is why sort of like, we use the fib, because the fib is going to tell us sort of how strong is the conviction here. Because if you come back up to, so say 61, still definitely like a possibility that we see a sell back down. I mean, this is a nice structural area here. But the point that I'm sort of getting to is the sooner that it comes in, and so I sort of like, if somebody tried to buy these wicks and hold these wicks, and they didn't get out, and they go, okay, boom, that's enough for me, and they get out, that adds to the sell pressure down here. But it means people are jumping off at the very first kind of technical level that they could potentially do it at. And that is generally only for one reason. Like if you're moving if your sells and or even if a collective idea of the market is all selling at one point or trying to get out of things as quick as possible, well, why are you doing that? You're doing it because you think it's coming down at least over here. You know what I mean? It's sort of like I tried to buy it at 33.20, didn't work, went to 33.10. Okay, if it gets back to 33.20, I'll just take my chips off the table and I'll just assess how it's going. That's going to add to the sell pressure, which comes down here. And this is why you need to get that third leg to see, are the buyers on the flip side of this going, hey, look, I bought it at 33.10. You know what? I'm going to buy it at 33.20 because I think it's going to 33.40. And that's the sort of the tussle between the sort of the conviction of the buyers and the sellers there. So in this case, I'm looking for this continuation to move to the downside. So my interest is on this idea of where do these sellers start to come back in. And if they come back in on these wicks, so if they come in at 23, if they come in at 25, even if they come in at 31 into this area over here and start to sort of drive it back down, the first target I'm going to have is back at these lows, so back at 33.13. But the idea is then potentially to see if they can sort of pop that through and drive that sort of sell down through 33.10. And underneath 33.10, so I'm going chart to chart here, we're probably going to be looking back down at these major levels down here. If we get onto a daily time frame, this kind of 32.80 to 32.90, that's the main area. Because as you can see, and this is what I say, so like the stuff's the same on every time frame, the price action and structure is the same. What we've seen is a range through here. So we know the sellers are here, we know the buyers are here. Back forward, back forward, back forward. What we've seen now is the sellers were accepting this amount here. Now they've moved down and they're accepting this amount here. And it's the same thing that I just covered a second ago. And you want to see, is that conviction going to be enough to drive price through this level? So what we're going to see is potentially is a move to body fill down over here. So let's move this one down over here. Oof, that's your body fill for this particular sort of setup move here. So around that sort of like 32.90, 32.9 to 32.80, you will see a reaction here. Like, you know what I mean? As it does come down into it, you will see profit taking. And you will see people that try to get long because it's been pretty good sort of thing. If you bought here, if you bought here, if you bought here, you've done pretty well. But the point is now sort of like, are they going to give it another shot? And the same sort of thing. If the sellers continue to push and drive down underneath that, they're going to say it's going to add to any potential sort of strength for a move down to the bottom side there. And we've seen a break of structure. This is a big thing, sort of like particularly with channels. And obviously in this case, a range is a channel. It's just sideways opposed to sort of moving up or down. But what we've seen is a break in structure. And I called this the other week, or the other day, sorry, whenever it was, when we're up over here. And I said sort of like, we were seeing a break of structure because this move here should have gone up and continued here. If you want to get continuation of the range, you want continue with the structure. The fact that they've sort of broken structure and started to drive it back down means that it's an early indicator that we could be breaking down and moving down through here. Another thing that I did sort of mention at this exact point as well was that sort of little odd action with the with the spreads. Now, I covered this because I said at the start of the year we saw the same sort of thing happen, and I only learnt this through getting absolutely smashed sideways. But we saw that sort of odd push out of spreads, and typical. It wasn't news or anything. It was just around start of Asia Open. Spreads went out to like $4 or $5 on gold. And I put a post on X, and I said at the time that this generally is accompanied with some pretty heavy selling, and since then we've dropped, $100, which, a couple of weeks ago, that wasn't anything, but it is still a decent move through gold. And we're not necessarily done with this move. So look, I think if we sort of give up sort of this 33.10, I think we're looking 32.80 to 32.90. I'd expect to buy effort from this level here, and then the same as I just said a second ago. See where the sellers move in. And this is obviously on the higher time frame, but the structure is still the same. See where the sellers come in, because you will get that third leg. If we touch down in here, we are going to see direction. If we touch down in here, we are going to see the buyers give it an effort, or profit takers, whichever, whatever. We're going to see price appreciate a little bit up through here. This is the thing we're going to get, even with this moves up. Look, there's been a lot of V-shaped recoveries, but I don't think this is it at the moment. Very choppy, as you can tell through the price action here. And this is a good example back over here, actually, now that I'm talking about it. You drive down, support. You move up, you find resistance, you got that third leg. This is the third telling leg. So this is the one that's like, as I said yesterday, it's like in footy with the second effort. Here's the second effort of the sellers moving down. What did they do? They moved up. So you now have a higher low. And what did price do after that? Well, it moved up. But you're going to get this leg through here. So the point being is if you apply this to where we are over here, you're going to get a move off this low here. You're also going to get this move down over here. And this is going to be the one that tells us higher low, on we go. Maybe you can sort of try and hold the bottom of the range. Double bottom, still a bit of indecision, or lower low. And we see continuation, this flow down under here. And certainly if we start to get a close down around sort of 32.60, there's not really a great deal holding it back from at least those 31.60s to 31.40s. So yeah, certainly looks like it could have a little bit more downside. I would say at least down into a test under 3,300 here, which is just a whisker off at the moment. All right, Aussie. Aussie's certainly coming off the one here, and this is another one. It's similar but slightly different. So this one had the sort of megaphone pattern, but again, you can see touches down the bottom, touches up the top. I've got a different feed actually that has this one. Must have had a higher spike over here, and because this actually had a better connection, so it actually made it three highs on the top over there. But again, this should have been going up to 66.50s. As a continuation of this kind of expanding megaphone pattern. It hasn't. The sellers were here. They've taken less now. They're driving it down. This was the big move we said yesterday, underneath 64.80. As you can see, sort of like under the 90s, under the 80s, it just dropped down, bang through here. So if we actually zoom this out, we potentially have a little bit of a channel support here. So I've been here a couple of times, but it's a crucial level for it. So again, if we see sort of US dollar sort of pull back down a little bit, this may see a little bit of a push up in Aussie, and the second effort is the one that we want to see to sort of drive down through here. 64.20 is kind of a confirmation that you're probably going to go a little bit lower with this move. And obviously, I've got quite a sort of Quite a Actually, let's move this because that didn't break there. So let's update that. Look, it's quite an ambitious price target, but that is structurally with a measured move where the measured move price target is 62.40s. So I'll sort of revisit this one when we when we come back to it. But at the moment, where we are, it is on that little support line. We did see this thing hold quite well last time. This was NFP. We were about to as you can see, my nice little sort of ambitious arrow coming down through here, thinking, yep, well, we're going to get smacked. We had NFP and flew up through here. But as you can see, we've almost completely undone that NFP move. A little bit of a head and shoulders potentially. It's a bit wonky for me. I don't particularly like that as a head and shoulders. Let's see, where would the measured move be with that though? So measured move with this would be so measure if this were to be a set of head and shoulders here, which I mean, look, technically it is. You got a nice little neckline, retested, boom, boom, boom. Measured move is back down 64.20s. So if we do break under here, the play I think will be this kind of move down into these 64.20s, which is a horizontal as well. So you got the confluence of potential of this measured move of the head and shoulders. You've got the horizontal rally effort, second effort. That'll be the flow that I'd be sort of looking. Should we get a breakdown towards 64.20? 64.20 is kind of a pretty major one for the Aussie, I would say. Like there is a bit of support in the 30, so 63.80, 63.90 area. But I think once you've sort of broken down through here, you'll have the momentum to sort of carry through here. Again, you'll see like the age-old thing, nothing goes in a straight line. Yeah, that's true. So you'll see reactions at these levels. It's just, is that enough to overcome sentiment then? Because when we see that, we'll probably be seeing US dollar push up a little bit higher there as well. So I wouldn't be surprised, potentially a little bit of a push up here to sort of try and sell into. Like I said, similar with gold. If we can get back up to say 64.80s, I'd like to sort of sell it down from there. That might be a bit ambitious. Yeah, 64.80 is back up over here. So if we do get a push up over here, I'll be probably looking to sort of sell into this thing to sort of target these lows that we're at now, which is like the 50s, 50 line, and then sort of the main target 64.20. So not too quick to sort of jump into too many things. I closed the last of the Aussie shorts just at the moment. So if we do get a rally up, I'd like to sort of sell into that. With these sort of things, you could be a little bit tricky and be like, yeah, I mean, look, buy the dip has been a magical sort of thing for Aussie longs and that all year, but eventually that's not going to work. And they're going to be the people that get absolutely torn apart. Um, but the thing is, it's sort of like, I don't particularly at this point, for myself anyway, want to buy this position here for the faint hope that we get 10 or 15 points here to then sort of be trapped in it and have it sort of just continue down with this flow. Because as you can see, they're selling into it hard. You're seeing US dollar catch a bid. I would say the momentum's shifting back into the US dollar here at the moment. We got Jackson Hole at the end of the month and end of the month, sorry, end of the week, and that's from the sort of talk or the headlines of it all is that Powell's going to be a little bit more not hawkish, but not a better way is probably it's not hawkish, but to be less dovish than the market may be sort of thinking at the moment. And we're seeing equity markets cool off a little bit on this sort of stuff. And obviously US dollar sort of firm up a little bit here. So as again, point is I don't want to try to go for 10 points in one direction just to get caught in it to have it sort of rip down to the other side over there. I think 64.20 is where we're going, at least in the short to medium term. And then sort of a rally effort off that. And again, we look at where the sellers are, look at where the pressure is applied back. If we see it sort of come back up to 65, we know that sell down is a pretty weak kind of it's lost a little bit of its oomph and its momentum. But if you see it sort of come back in and they only get 20 points off that, like this little move down here, 64.20s back up to 64.50s, and then the sellers step back in there, then you know that pressure and that momentum, it will be coming quite strong. And you can see that sort of like in this example, If we came down to 64.20, I'll put that onto 64.20 on the dot, close enough too. If we do play out like this sort of course of action here, that's only coming up retest of the underside of this channel, 23%. This is forward thinking, of course, as well. 23%. You know that momentum is bang pushing hard down, and this is how you can use fibs, sort of like within smaller trends. You don't have to grab the trend from the low of what I mean, from April lows up to here to work out where you're at. Particularly not with the time frame that I trade anyway. All right, move on. We got silver, and silver has broken back down. There we go. So silver sort of, it was sort of arming and ahhing, had a little sort of bit of a triangle, but as you can see, as soon as it gave up that triangle, whack, coming back down. So it's quite important of where silver is here at the moment, because we are sort of seeing that obviously it's sort of broken back down under this big red zone here. So this red zone here is a 15-year level. It was like wick highs or something like this, but you can see the market bought it as soon as they had a chance. They bought it, and then now they've allowed it to go through. So I would expect this to sort of just stuff around here a little bit more, but I think the target now, as I said, is down over here. Boof, and I would say we've probably got another sort of 2% or so to move down here. So I'd probably be looking, see what they do at 63.40 from here. But you probably got a 90-cent move down here with silver. Should you be inclined? Move along. How did copper go? So copper's through its channel. All right, so no fireworks with this sort of thing. Look, it did move basically, in line with the other metals. We saw all metals get a little bit of a hit overnight, and it's failed to hold this little grind up channel here. So I would, like similar with silver, I would expect this to sort of stuff around a little bit and then bang, shoot down. So the target here is, 414. Major levels are 436. 7. So major level is down underneath here. If you break down under here, this would be technically the swing low. Actually, no, this would be the swing low, sorry. But this would be a sort of continuation past that lower low, and then we could start to look at these bigger levels over here. This is going to be something that will weigh on Aussie as well. This has been the year of correlations being out of whack. So it's taken a while to sort of, and this is one thing I know, is you got to be able to pick the people that make good, consistent money are the people that can pick the correlation changes, because correlations don't work forever. And that's, because, trading's not easy, yada, yada. Well, that's fine. But the people that can sort of see that and then adapt to the new style quicker than others, can sort of like, obviously, go with the flow and sort of, move a lot better and continuously make bank. But one thing that we have seen in terms of the correlation that's been out of kilter is copper and Aussie, more specifically. So copper and Aussie, and that copper typically strong copper, strong Aussie. We saw copper multiple, new yearly highs. You saw the big spike up over here. I think the big thing here was the confirmation was the size of this move through here, and Aussie didn't do anything. It was very specific with copper, but still, if the correlation is there and copper goes up, you would have expected at least some sort of reaction from Aussie. Got nada, absolutely nothing. So, that's kind of been out with it all. But again, as much as you can sort of pick when these correlations go out, when you can pick these correlations coming back in, that can also be valuable. So if we see Aussie start to sort of falter, if we see copper start to really break down over here, particularly if we break this sort of 437 level, I think this is when we're going to see this stuff sort of weigh back on Aussie as well. And as I said, my targets are back down in 62 cents for Aussie. Move along, we got China. So one, still in its grind mode. One looks like a party going on with all the little arrows and everything. Look at these ambitious little moves that I thought were happening here. We go bang, and nada. Come back down into the grind box. So look, I'm still looking topside here. Still looking for US dollar strength. This is in the box that it's in. 720, I think, will be the second effort here. And this is just the course of action. There's not really too much to say with this one, because it just, as you can see, it just grinds. And look, that's what it does. If you remember back, way, way, way back, where was it? It was like 3 months or something. Is this a period up over here? Some period through here. Anyway, whatever. Point is, as you can see, it's not a super fast mover, but I do believe that this is the level and the direction that we are going. We've still got that gap up over at 724. I think if you do break this, I think this is a stupid price target now. I mean, look, it's not a stupid price target. It will get a reaction, but I think you could pretty much sort of even look higher, 728, because this is a big support area. It's held a lot of times as a resistance. It got smacked on the nose as a resistance. If you do all this work and all this effort just to get back up above it, you're not going to go 10 points and then fail. If anything, you're going to close that gap. We're going to see a pushback down, retest to sort of regain it as the buyers support, and the people that were shorting it would be sort of, okay, that's our chance to get out. That'd be your move. So a little bit more of an ambitious price target up over the top side here based on US dollar strength. It's going to weigh on Aussie. If you see this play out, Aussie will be back down 62s as well, because Aussie needs at least a stronger yuan, at least. So you know what I mean? Sorry, a weaker yuan. So it has been obviously a little bit stronger because this is US dollar CNH. Not necessarily that it's stronger, just that US dollar's been super weak. But regardless of that, we have sort of seen this on the sort of front foot for a while. So should we break 720? You're looking for 722. Break 722. I'm looking quite ambitiously back up towards, say, 728. Again, little levels along the way, but that's probably the bigger move that I reckon we could see minimum sort of coming in. This could almost be, if we look at, probably not with this actually. Oops. Not a big fan of that because there's not a true sort of range around through here. So no, I'll take that out there. But I'd probably sort of fall back, as I said, onto the horizontal and say they grind it back up to 728. But, we'll see how that comes. Little way to go. All right, that's it from me.